Yeah, just on the domestic economy, and it's kind of been alluded to a lot tonight around the wealth effect, I guess, of housing and that coming off. And I think, like, you look at the moment, you've got really low savings rate, record household debt, which we've seen both be high at certain points, but now you've got both at the same time, and you've kind of had this wealth effect sort of keeping everything ticking along in the background over 20 odd years. So that's all sort of coming to roost. How does that sort of, I guess, how do we see that play out in the broader economy domestically? Not good as sort of the read, but like, how does that actually really sort of flesh itself out in what we're going to see over the next sort of 6 to 12 months?
Yeah, well, I think Australia's run out of booms. So we had obviously the mining boom, and then we had the housing boom, and then both prices and construction. Those two are now falling off. Now we've got the tail end of the so-called Botox boom, which is profitless stuff like NDIS and obviously government investment in infrastructure. That should run for another, maybe 18 months. Actually, it could run for longer than that, but in 18 months it should peak, and then it will stop adding to growth.
Yeah, well, will we be relying on that if there's not, unless there's something else that, I guess, comes through?
We'll be more and more reliant on it.
Is that going to be the...
Yeah, well, we already are to an extent. I think it's just, it's going to get worse. So we know that consumption makes up about 55% of growth. And as I said previously, real wages are still falling. Household savings rates almost down to zero. It's actually negative once you take out superannuation. But that said, I think we'll get a little bit of a wages bounce. Nothing spectacular, and certainly not what the budget expects. Purely for the reason that it seems to have the highest correlation with the underemployment rate, and the underemployment rate did fall a little bit today. So I think wages will pick up a little bit, but it certainly won't be enough to juice consumption. And at some point, that saving rate's got to stop falling. And usually during housing corrections, we saw it after the GFC, it actually goes the other way. And and if households start saving again, well then consumption's going to get smashed. And that'll be potentially a big drag. So, honestly, it's a little bit like doing this one. You don't know exactly what's going to happen, but you know that there's a lot of these stiff headwinds building, especially around housing, etc. So I think it's going to be pretty weak looking forward, 6 to 12 months.
Normally you only get the falling savings rate when you have the asset price boom. Right.
It's a weird one.
Yeah, and now we have both falling, and wages. The consumer's going to buckle.